Stuart, good news is good news. Is that a change, and why?
I think, Jonathan, good morning. Thank you. I appreciate the compliment on my suit, of course, as well. I put a lot of work into it. For me, it's not a change. I've been quite surprised by the narrative that folks want growth data to deteriorate for the markets. And I sort of understand the logic in the sense that there's a view that the unemployment rate needs to rise for inflation to come in. But in our view, the Fed is dealing with inflation tail risk, and they're committed to doing that. And allowing them to focus on that without growth data deteriorating meaningfully, we think is actually a better outcome for markets, in the near term. Clearly there's a level of inflation at which the Fed can, make a trade-off decision between inflation and growth risks. But we are just nowhere near that at this point from an inflation perspective. So for us, whether good news is good news or good news is just kind of neutral news, it's hard to say. But from my perspective, I'd rather the growth data remain solid and open up a window for the Fed to really just fight inflation and get that tail risk under control.
So tactically, you're positive on this market, Stu, and I wonder if that means, based on what you've just said, in the short term at least, you're expecting some more good news.
Look, we were positive last week, definitely around earnings and with the market moving higher. I think obviously one day ahead of the Fed, it's a little hard to carry a whole ton of risk into that event. But, big picture, I think we're at a level here where we're sort of in no man's land at about 3,900. I think once you get above 4,000, you'll start to get the macro community, leaning short against the market. Earnings continue to come in, not great, but I think better than what the bear case was, and positioning is still light. So I think there's a case to be made that the market can move a bit higher, from here and from where it was last week. And then you probably do run into a little bit of a hard ceiling, right? The Citi base case is still about an 80% chance of recession, 60% that'll be mild and 20% that'll be hard landing. So when you've got that kind of recession risk on the horizon, it's hard to kind of be structurally bullish. But I do think there's a window here where the market can continue to move a bit higher kind of post FOMC.